Hi everyone, it is Friday, the 9th of April 2021. This is your daily 10-minute business and finance news wrap. Later, what the RBA has to say about house price growth. But first, to the Australian share market, which fell 0.1% today to 6,995, ending a 5-day winning streak. Resource stocks were down on lower iron ore prices overnight. The banks were slightly higher. CSL down 1%. Dominating sentiment is that reset of Australia's COVID-19 vaccine rollout, amid new advice for under 50s to have the Pfizer jab instead of the AstraZeneca one, which CSL is manufacturing here in Australia. For more on that and the rest of the day's market action, I spoke earlier with Marcus Bogdan, the CIO of Blackmore Capital. Marcus, how have the changes to the government's vaccine rollout been playing on the share market today?
I think they'll have an effect. I mean, this was always going to be the core risk in equity markets, and we've seen this issue in many countries, and we're seeing it here today. And obviously, CSL is front and centre of that. They're slightly weaker today, but I think there are broader reasons why CSL has generally struggled, and they've been COVID-related, relating to their plasma business.
Can we go into more detail about CSL and its implications? Because the other interesting thing with CSL is that while the share market has been recovering, say, in the past 2 to 3 months, CSL hasn't.
Yes, well, I mean, the irony is generally healthcare stocks are generally defensive in downturns, but the idiosyncratic nature of the pandemic has affected healthcare companies dramatically. CSL primarily derive their revenue from the collection of plasma, and they're making a range of therapies there. And COVID has disrupted that. The demand for plasma therapies is still incredibly strong. However, the people getting to the centres, particularly in the United States, has been challenging, and so collections have actually been down 20% in 2020, and those trends have persisted in 2021. And the irony is that with very large fiscal spending in the US, donors are actually supported to go and donate plasma, and that's also affecting supply as well. But the flip side of that is that their flu business should have another record year. They're a key manufacturer for the Northern Hemisphere and the Southern Hemisphere, and that business looks like it will generate very, very strong revenue. So we expect that for CSL, the recovery in plasma will be in the second half of this year in terms of supply. The issues around being a toll manufacturer for AstraZeneca will not be material in terms of earnings. However, it does underlie the national importance of CSL as a provider for seasonal COVID going forward. And they may need to retool their plants for the new technology, the mRNA technology going forward. But net, I think CSL is still well placed over the longer term.
I'm curious to know your thoughts about the reopening economy trade. Does the fact that this vaccine rollout has hit a bit of a hiccup change that?
In the short term, I don't think so. I mean, you've had the early movers who have been beneficiaries of the reopening. The first beneficiary was obviously BHP and Rio Tinto and the miners with China. They were the first into COVID and they were the first out of COVID. The second area that we've seen incredible support in terms of recovery have been in financials and in the banking stocks. And I think the support that we're seeing there, particularly in housing and capital positions, those elements are still in place for those companies. I think what is more interesting at the moment are those potential recovery plays that have lagged the share market.
And what are they?
So, well, we've already mentioned one. One is CSL, and I think they will recover. But then there are companies in the energy sector like Ampol or Viva Energy, which are, very much sensitive to consumers coming back and driving, diesel consumption for commercial use, and ultimately jet fuel. And so that is a recovery that is still to be played out. And then in other healthcare companies such as Ramsay Healthcare and the normalisation of elective surgery and medical procedures, not only in Australia but internationally as well, is another area of potential recovery that we're looking at.
Marcus Bogdan there, the Chief Investment Officer at Blackmore Capital. From the markets, let's go to the housing market and what the Reserve Bank has had to say in its latest assessment of the economy. It's the release of its financial stability review. Experts wanted to know more about what it had to say about the housing market and prices. So for more on that, I spoke earlier with the Chief Economist at IMF Investors, Alex Joyner. Alex, so what did the RBA have to say about the housing market in its statement today?
Well, the RBA pretty much reiterated what we all know, that the housing market is going from strength to strength, and we're seeing that in property prices. It did highlight a few interesting, differences in different markets. It noted that regional prices are up 11%, capital city prices are up 5%, and that's a bit of maybe a work from home and people looking to get out of the city, as it were. They also noticed the strength of the housing market, as in homes, rather than apartments. And that's obviously got to do with the closed borders, where apartment demand is really driven by that inward migration and international student demand.
So ultimately, is it worried about this rise in house prices and any mention of any potential macro-prudential measures down the track?
Look, it's going to be watchful of house prices and, the very rapid rise that we're currently seeing. But really, for macro-prudential measures to come in, it's going to really need to see a deterioration of lending standards, much more risky loans going out to people in a material way. And that's really the red flag, I guess, for both the RBA and APRA. And there was no mention in the Financial Stability Review today of any deterioration that it can see currently. We are starting to see a little bit in the high LVR space, sort of above 90%, but that's from very, very low levels. So really no red flags on macro-prudential in the FSR today.
But do you think down the track we'll need to see those types of measures in place?
I think we might. I don't think it's a near-term risk. I think it might be a late 2021 or into 2022. And the reason I say that is because the red flag will be that over-exuberance in the lending market, borrowers looking to borrow probably right up to their limits. Not many borrowers really do that, and they're not having to do that right now. But as they're chasing the market higher, they might be looking for those higher LVR loans or those interest-only loans that are really the risky ones and that APRA and the RBA get worried about. And that's when you might see the real risks of macro-prudential measures coming in.
Okay, what does it say about businesses?
Well, the business sector got a pretty good report card overall. There's significant financial buffers in the business sector, and there's, importantly, a lot less businesses accessing the loan deferrals that were available from the banking sector. That's down from 13% of businesses sort of mid-2020 to about 1% now, and that's a good sign for the business sector. The little risk there is the RBA did note that there could be a little bit of a rise in insolvencies as government support is taken away, but they don't see that as being a material risk to the economic recovery and likely to have a pretty small impact, if any, on level of employment.
And just finally, overall, what did it say about just how healthy Australia's financial system is?
Well, I think the Australian financial system got a bit of a tick from the RBA in the Financial Stability Review, just because we've weathered this pandemic and subsequent recession relatively well. The economy has been supported by the financial system and will continue to be supported by the financial system as we recover. And if it wasn't resilient going into that, I don't think we would be able to say that as confidently coming out of it.
Alex Joyner there, Chief Economist at IFM Investors. That is SBS On The Money for this Friday, the 9th of April 2021. Don't forget you can follow me on Instagram and Twitter at Business Ricardo. This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.